Welcome back. As promised, let me invite Bhavin Shah from Sameeksha Capital on the show now. Bhavin, well, now you look at all the stocks, the markets, but you've looked at IT very, very closely. What have you made so far from TCS, Infy, Wipro and Persistent? What would your top takeaways be and the kind of sell-off that we're seeing in Persistent and the stock price rise in Wipro today?
I think if you go back to the commentary before COVID from number of companies, we were looking at from the large IT companies, growth rates starting to come down to mid-single digits. COVID came and the whole thing changed. There was a huge tailwind and a lot of acceleration of growth. And then I think I also observed that some companies started to extrapolate that into a 5-year story and so on and so forth. And I think that probably also led investors to believe in those kind of expectations. But the reality is that now we are back to sort of a normalized world that existed pre-COVID, broadly speaking. Obviously, there are some new disruptions that we can talk about, especially with respect to artificial intelligence and how it might change the whole coding world. But the point is that, I think one should one should adjust their expectation of the industry growth and growth for the large cap IT companies to much smaller numbers than what we have observed in the last 3 years or so. And I think that to a smaller extent also relevant for mid-sized IT companies, because obviously mid-sized IT companies and Persistent in particular and a few others have some unique drivers and they're growing faster, they are smaller, it's easier to, they don't face as much of a challenge as the law of large numbers that big companies are facing. But I think inevitably the growth rates will come down. And I think reality hasn't sunk in fully in the valuation of these IT stocks. And I think that's what we are going to see, that adjustment is going to happen. I think we are still talking about companies trading at trailing multiples of 50 and 70 and 80, and I just don't think the industry will have that, the growth rates to support such multiples. And I think, the case in Wipro is that perhaps, given how cheap it is and maybe the commentary from the new CEO talking about, basically just sticking to the basics, might have appealed to some investors and, maybe starting to take a look at that. But overall issue of the growth rate, I think, is what one has to keep in mind when investing in the sector.
What about HDFC Bank, Bhavin? The numbers looked okay. The numbers were good. The positive surprise on the NIMS front, the bank has created an additional provision worth over 11,000 crores, but the stock is not doing well today. Some profit booking after Friday's rally. But what do you make of the numbers there? And do you think that the worst is now behind HDFC Bank and after a bit of consolidation, the stock will again start to re-rate?
I think for a patient investor, that might, it might play out the way you described. I think, clearly this is not your high growth stock anymore. I think if they can deliver consistent 16% growth, I think that would be a good achievement. And accordingly, the share price may perform. Clearly, the expectations are not high, valuation is very reasonable. And so I think it's a reasonable investment case to make. And yes, the results were clearly there was no negative surprise this time, and I think, but at the same time, their lack of willingness to talk about guidance, I think perhaps maybe is also taken as a sign of lack of confidence in delivering growth, and that's why this maybe share price is adjusting a little bit here. But I think that on an overall basis, it seems like a reasonable long-term investment from here on, with a sort of, tone down the return expectations going forward.
Okay, HDFC Bank, reasonable investment idea over the longer term, but just tone down your growth expectations, at least for now in the near term. Bhavin, what is the advice that you would give for the shareholders of GSPL and GAIL after what's transpired today, the big, sharp, higher than expected, tariff cut?
Sorry, I've not looked into that, not follow those names, so won't be able to comment on that.
Okay.
Do you follow oil marketing companies as well, Bhavin? Because there is a lot of divergent opinions on the street coming in, and the moves are very volatile when compared to oil prices as well. Where do you stand on this? Is there more upside still left for the OMCs after the kind of run-up that they're seen over the last 6 months? Or now do you not see the valuations not supporting that kind of an upside going forward?
Again, I'm going to have to say I'm not really into that space, not really, it's not one of the spaces that we have invested in.
So what are the pockets that you're finding value right now, Bhavin, considering the run-up that the markets have seen now that there has been a bit of a consolidation, but from the lower levels from March to 2023, the kind of run-up that we've seen, where is it that you find value as of now?
See, I think you just saw the prediction for more perhaps above normal monsoon, or at least close to normal monsoon. And we have seen that the agrochemical space has, not really done much for a while, even some of the stocks in the fertilizer space. So I think, there might be some opportunities there to look at. So I would go and look for some things in that space. I also think that, the life insurance sector had gone through a lot of changes in regulation. But I think we probably can expect a lack of, any major negative surprises coming through there. And if anything, there's the uniform insurance license that is being talked about, might give them some broader area to play with. So that could be something that one could see some value there as well. Continue to, although it's not, I won't call it a huge value, but continue to see very strong prospects for the hospital space. And I think I would also, try to look for some things there as well.
Any particular thoughts on Exide? The stock after that partnership which it announced has just skyrocketed. Pull up a 2-week chart and you would see, I think this month it's up close to about 50%.
Yeah, I think it's I think there are a few things there. One is, it's not the whole, they have business outside of, the vehicles, the IC engine vehicles. I think that business is very strong. I think, and then they obviously have some kind of, alignment in the EV space as well. And I think market is recognizing that, fundamentally a duopoly space and, very strong history in terms of cash flow generation. So the market has reacted very sharply to that. I think, I'm not sure if I'm going to chase it here, but I can understand, why some people might be getting excited.
Charging away is Exide. But Bhavin, pleasure as always talking to you. Thanks a lot for joining in and sharing your thoughts on the specific stocks as we go forward into FY25. Thanks a lot for joining in. That was Bhavin Shah of Sameeksha Capital. But as we slip into a short break, we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, the CNBC-TV18 Accelerate, the personal finance handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, the 11th of May, 9 a.m. onwards. We'll be diving into everything that you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There is a lot to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com and we'll see you on the 11th of May.